welcome back to YouTube Portfolio, a portfolio run by YouTube. If you want me to buy or sell a stock, all you gotta do is leave a comment down below. The most upvoted or highest rated comment will be the thing I do the next week. This is pre-recorded, so I just ended up topping up my Apple there with about $4.44 worth because I had an uneven amount. So I think the total contributed amount to this portfolio now is somewhere around $50. Anyway, got a pretty cool video for you about renting versus buying. Today we're going to be talking about whether it makes more sense to rent or to buy a home. Now, we're not going to do the traditional thing, which usually states that if you're going to stay in an area for X number of years, it makes more sense to buy a home, because that's not true. There's a lot of factors that influence whether or not you should rent or to buy a home, and today we're going to look at them. And in some cases, it can be even more advantage to you if you were to just rent for your entire life than to ever end up buying a home. So this is a calculator called Rent versus Buy. It's a calculator that I made, and all it does is makes this graph down here. Explaining this graph is this is the years, ends at 30 for a 30-year mortgage. Now a lot of people will say, well, what about a 15-year mortgage? If you're thinking about a 15-year mortgage, you need to look into the math and you will realize that a 15-year mortgage is pretty much never advantageous to have. Now, down here on this graph, this is your home value, presuming that you buy a home. Now this obviously, at the end of your first year, well, you don't actually get to sell the home and all of a sudden you have however much the home value is. So this down here is the real amount that you would have. This is the liquidation amount. This is considering if you were to sell the house, counting against the amount you paid for closing costs, the amount you paid for all that other stuff, and including the inflation of your house's value that has happened in that 1 year. This is how much you would actually be able to walk away with. This red value right here is a very interesting value. Now this is taking the idea that the difference between your rent that you would pay and your mortgage that you would pay. So in this case, we're looking at something like, what is that, $688? If you were to invest that in the market, what would that do for you? So over here is the amount of cash you would have on hand, assuming that you rented for 30 years. And here is the amount of home value you would have on hand, assuming that you bought and you paid off your house in 30 years. Notice that these are not exactly the same because there are some costs that you never actually end up recouping. Going back to this calculator, these are two properties that are in my area. They're both around the same standard of living, which is important because if you think about it, you're going to want to live in a place that is around the same standard of living. Obviously, if you can get your rent down to $700, well, it's going to make a lot more sense to rent. And if you can get the cost of your house down to $12, it's going to make a lot more sense to just buy a house. But you're looking for the same exact standard of living. And this also considers that you're in the same area. So looking around here, these two values don't actually make a huge amount of difference. The money down comes from 20%. There it is, typically 20% of the house value. That's to avoid PMI. Mortgage insurance. House appreciation value is how much your house appreciates over time. Now, obviously, if your house is appreciating at all, it makes a lot more sense to rent. So if you're in one area, your house isn't appreciating, well, then you definitely shouldn't buy a house there. Now, if your house appreciates an insane amount, let's go all the way up to 7%, well, then it makes a ton more sense to buy. And you might be saying, wait a minute, why is the rental value negative? Why did you actually lose money renting over time, even though you're investing that money? Well, here's why. Consider the same area. Let's say you can buy a house that's right next door to the house you're renting. Well, if you think about it, the house appreciation value has to increase at the same rate that your rent increases. So if your rent increases 2% a year, the house is probably going to appreciate at 2% a year. Now, why is that? Well, because it doesn't make economic sense for it to work any other way. If the house appreciated really, really fast and the rent didn't, well, all of a sudden, it wouldn't make sense for anybody to rent out their house because, well, their house is worth a ton and they could sell it and make way more money than they ever could renting. And vice versa is true. If the rent increased to, let's say, $4,000 a month for a house that's this much, well, it just makes sense that you would want to buy the house instead of renting it, and nobody would rent. So they increase at about the same rate, meaning that your rent is going to become more and more expensive year over year, whereas your house value is going to become more worth it, more you're gonna have more asset value year over year. So that's a crucial thing. And something of note to look at in this particular case, obviously it's going to be different in other places with different HOA payments, maybe different annual maintenance. You might be able to get a different loan interest. But looking at this particular case, well, as soon as we're down to 3.5, makes a whole lot more sense to rent. In fact, renting would net you almost about $200,000 extra at the end of 30 years. You could go and buy that house and have $200,000 left over. Vice versa, once we pass kind of 4-ish percent, 3.8%, it switches, and all of a sudden it makes a lot more sense to buy a house rather than to rent. You would have about $200,000 extra here. So these are super sensitive to these values right here. Putting this back to 4%, you can see the same thing is true for interest rates. If you move interest rates way down, well, it makes a lot more sense to buy a house. If interest rates are high, if interest rates are 4.5%, it makes more sense to rent. So these percentages are super, super important. Let's go back down to 3. That's about what it is now. I think you can get a little bit lower interest rates now, but 3 is a good area to stick around, I guess. Investment returns, another one that makes a lot of difference. Obviously, getting something like 9 to 10% investment return is pretty difficult, but can do wonders compared to your house value. If some people do have they have a lower risk tolerance, so something like 6, that is pretty common. If you have a lower risk tolerance, well, that starts to make it look a lot better to buy a home. So just to kind of wrap this all up, should you rent or buy a home? Well, unfortunately, the answer is it depends. Depends on a lot. The two things that you should really look at are how much you think that your houses are going to appreciate in value over time. One thing you could look at is how much they have appreciated or how much rental prices have appreciated around your area. Another thing you need to look at is your loan interest rate. How's your credit? What loan interest rate can you get? If you can get a super low interest rate, locked in, 30-year mortgage, then maybe it makes a whole lot of sense. Another thing to look at is how much your HOA is, how much your annual maintenance will be, and how much that factors into your closing cost here, or your monthly cost, sorry. Because that can make a huge difference. I mean, we just looked at the HOA earlier, and an HOA of even half almost changes the outlook by $200,000 at the end of 30 years. And an HOA of double completely changes the game. So looking here, this is a super important number. How much are you going to pay monthly? But once again, it's important to remember that this calculator is only for the same standard of living. If you're willing to compromise standard of living when you buy a house, well, then it's probably going to be more beneficial to buy a house. And if you're willing to compromise standard of living with you when you rent, well, then it probably makes more sense to rent in that case. Thanks for watching. I hope this was super interesting to you. I hope this made sense. Didn't leave a comment asking any questions to clarify, I'll put this website in the description. Thanks for watching. Remember to leave a comment down below if you want me to buy or sell a stock, and check back in next week to see what stock we buy. Remember, I'll be back, so I will be buying a stock or maybe even 2 stocks depending on the comments.